Good afternoon, Robert Scribbler. It is August 2nd, 2018. Thank you for joining me for another climate change and clean energy video blog. Now for this segment, I'm going to provide for you a rundown of Tesla's second quarter statement and also provide you with some Tesla news. There appears to be quite a bit of news coming out of Tesla. And since Tesla is a major clean energy leader, this is, in my opinion, of considerable importance. Now, some highlights for the second quarter statement are that Tesla has achieved an automotive gross margin. This is a profit margin of around 20.6% in GAAP accounting and 21% in non-GAAP accounting. And what that means is that overall Tesla automotive sales are achieving about a 20% profitability. And that's excuse me, pretty good considering the fact that Tesla is producing a massive number of Model 3s and is still dealing with some initial production capital expenditure costs. And it's also notable that during the second quarter, Tesla says that its Model 3 gross margin turned slightly positive, and that it's expecting an approximate 15% gross margin for the Model 3 during Q3. And this is pretty extraordinary considering the fact that Tesla has so rapidly ramped up Model 3 production, and there's a lot of capital expenditure that is involved with that. But what's even more extraordinary is how many Model 3s Tesla is expecting to produce in Q3, approximately 50 to 55,000. That would put Tesla's total electrical vehicle production in the range of 60 to 70,000 for the third quarter, which is extraordinary. Extrapolating to a year, that would be 240,000 to 280,000 electrical vehicles per year from single manufacturer. And this is in the context of a Model 3 ramp that is continuing and is likely aiming to hit somewhere close to 10,000 vehicle per week surge rate in 2019 as the $35,000 version, short-range version of the Model 3 is expected to start hitting production at that time. Now, the end of the second quarter also saw that $2.2 billion in cash and cash equivalents remained, and at the end of Q2. And this is kind of also a big deal because one of the major short narratives has been that Tesla was undergoing an epic cash burn and was soon going to have to borrow money for more cash. And $2.2 billion is enough for a company like Tesla to continue to operate comfortably. It's a bit lower. It's about $500 million lower than what it was in Q1. But with expected profitability in Q3 and Q4, we can expect the so-called cash burn crisis, which is, in my opinion, overhyped, to abate. Now, just want to focus in on this one graphic that Tesla provides here. And it's the market share for premium mid-range, mid-size sedans. And this is for the US market. And what it shows is that the Model 3 presently accounts for more than 50% of the entire mid-size premium sedan market in the US. And that is a huge achievement. The mid-size premium sedan market includes all of the BMW 3 Series, the Audi A4, the Mercedes C-Class, the Lexus IS, and the Jaguar XE. And so these are relatively high-cost, premium mid-size sedans, and based on this chart, a Tesla Model 3 by itself accounts for more than half of the market, which just shows extraordinary demand for this new energy, clean energy vehicle, and that's a stunning achievement, and it's likely that this market share will continue to grow a bit as Tesla Model 3 production continues to expand. So pretty amazing indicator, and coming on the back of the July announcement of more than 14,000 Model 3s sold in July in the U.S. market alone. So just an amazing achievement here by Tesla. Now I'm going to go ahead and talk about a couple of other features of this report, drilling down to some of the monetary issues. Now, for the second quarter, Tesla reported 3.1 billion approximate total revenue from automotive sales, and approximately 4 billion total. And this is a growth in revenue. Tesla's revenue has been rapidly growing, and this is a approximate $600 million increase in revenue for Tesla, which is major revenue growth. Now, Tesla is also reporting a gross profit of 618 million, which is approximately 150 million increase on the previous quarter. And Tesla's net loss dipped by about $40 million, but was still over $700 million for the quarter. And this number here will be a key indicator going forward. Tesla's aiming for profitability, so if it achieves a 15% gross margin, this net loss should turn into a positive for Q3. So this is a number to watch. Now, something that I'm sure the Tesla shorts are going to harp on is the fact that the net loss to stockholders here was a record, and this was not entirely unexpected. So, but going forward, as gross margins improve for the Model 3 and as high-level production for the Model 3 continues, then we should expect this number to shrink and, according to Tesla, become positive in Q3. So some good indicators for Tesla overall for the recent report, and we can see that the market in general has taken this news positively, with approximately 13% increase in Tesla stock for today so far. Now, some other good news for Tesla that I'd just like to briefly talk about is that the backbone for Tesla's massive surge in electrical vehicle sales is battery production. And the Gigafactory 1, which now produces an annualized run rate of approximately 20 gigawatt hours. That's 20 gigawatt hours of battery cell production per year at present. It is more than all other car makers combined, and that's an insane advantage when it comes to electrical vehicles. Now, Tesla is expected to further increase Gigafactory production through its partnership with Panasonic to approximately 35 gigawatt hours per year by the end of this year. And the end expected capacity for the Gigafactory is projected to range around 150 gigawatt hours of completed cells per year. So that's extraordinary, and it's paving the way for global mass battery production, which is a key element of the clean energy transition. If you're going to link wind and solar clean energy with transportation, then you're going to need a lot of batteries, and this mass production is currently underway, with Tesla leading the pack. So, an overview of the present clean energy situation as it relates to Tesla. Thank you for joining me.